On now, Samvardhana Motherson came out with their numbers last week and it was a strong set. The revenue saw healthy double-digit growth, the margins expanded while the net debt has also declined. Pankaj Mittal, who's the Chief Operating Officer at Samvardhana Motherson, and Kunal Malani, the CFO of the company, join us now to talk about that. Gentlemen, morning to both of you. Kunal, I want to start with you. You know, the year has ended very well. It's a revenue growth of almost 23% that you've seen in FY23. Sitting on this base, what kind of growth do you see in FY24? What are you penciling in?
I'll keep it simple. Hello, can you hear me?
Yes, go ahead.
Okay. I said I'll keep it simple. I think hopefully we will beat this record next year as well.
Okay, so when you say beat this record, right, I mean, you're already sitting on a high base of over 78,000 crores. What could the growth be? Is it a 20% growth that you're looking at? Could it be much better than that? And what are the growth levers for the company in the year to come?
Look, in our view, there are tailwinds that are still playing out. I think some of our markets continue to do well. Europe and North America continue to do reasonably well. The premiumization effect continues. The disproportionate share of EVs that we have in our order book is also going to be helpful. And then we have a host of M&As that we have announced, which will all be getting assimilated in the next year. So all in all, I think it's going to be, on the top line, certainly a much better year going ahead.
All right, so we should work with a 25% growth for next year?
Difficult to fathom. It's not that the world is very predictable as yet. But as I said, I think we should still be doing much better than where we are.
All right. Now, I had a question on the margins, and let's focus on just that. Was there any kind of one-time compensation that you got for the higher costs in the previous quarter and the past quarter? If you could clarify on that aspect.
Not a one-time. As we have said again and again, we've been in discussions with the customer to pass on some of the inflationary cost structure that have now become the so-called new normal in the industry. Okay. A lot of that has happened. As you mentioned earlier also, we were working through to get some price increases from the customer, which has all been, to a large extent, been embedded in the annual results now. So I guess the best way to look at it is how we have done annually. I think that gives a good reflection of where we are, and hopefully we will improve from there on.
Okay. All right. The Vision Systems business, I think that's been the kicker, because the revenues on a sequential basis are more or less flattish. But the margins have improved by 300 basis points. And that seems to be the kicker. Now, you're telling us that these margins are sustainable. So which margin should we look at? The Q4 margin or the average that you did for last year?
I think the best way to think about it is the average that we did for the whole year. That is more reflective in our view of where we stand right now. Going ahead, we should be able to still see improvement from where we are on an year-on-year basis for sure. That's the way at least we see it, because as we said, we've got price rises during the quarter at different points in time, and those are in some way embedded today into what you see as quarter-on-quarter improvements. Going ahead, I think we will shift towards a more year-on-year improvement construct, because that will be more reflective as the markets evolve and the cycle again takes its turns.
So because of Sure. Can you give us some range because of premiumization that you mentioned, as well as, energy costs have subsided. You're trying to pass on raw material costs as well. You're trying to do some price hikes with respect to customers. Do you think you can get into a double-digit band as well? I mean, you've increased your margins to about 9%. Are we looking at 10 to 11% in the quarter to come? How much expansion do you see in margins?
Again, difficult to put it in those constructs. On an absolute basis, you should still be seeing improvement. I think that's the way we've been functioning. The absolute is important for us because we're an ROCE-focused company, and ultimately to generate ROCE, it's not the percentage margin, but the absolute with the certain amount of capital that we invest is what we need to look out for. And that's what we're really focused on. If that results in double-digit, yeah, for sure, we'll be very happy. But that's not really the focus. It's an outcome. The focus remains an absolute growth in bottom line.
Okay, got that. We have Pankaj Mittal, who's the Chief Operating Officer as well, who's joining in. Mr. Mittal, I want to talk a little bit about the EV programs, the electric vehicle programs, right? The share of EVs in the business is now around 6-7% by the end of FY23. And EVs give you better content per vehicle as well. So just want to understand, what's the eventual game plan? How much will electric vehicles be as a part of the total business? And how much will this help you grow your content per vehicle?
See, if you look at our booked orders of about 5.7 lakh crores, 20% of them are from the EV vehicles. And that gives a reflection of how the customers are thinking. The actual volumes as they pan out will, over the years, will depend on the different markets, different geographies. And as you mentioned, definitely the content per vehicle is much higher in EVs. So we are working, it showcases that our products are liked by our customers. It also showcases the kind of cooperation with which we are working with all our customers across the world.
Is there any scope, Mr. Mittal, to bring down your debt further? Because your debt this time has gone down by almost 11% quarter on quarter. Still quite high at almost about 7,500 crores. Any plans to bring it down?
So that's been the endeavor of the company to continue to improve. And as the supply chains are easing out, the direction has been that how we can optimize more on our working capital in our inventories. And on the other hand, you see that we are also being given multiple chances by our customers to acquire various businesses and to grow the business. So it will be a mix from that point of view.
Okay, all the best. Thanks a lot, gentlemen, for joining in and speaking to CNBC-TV18. All the best for a great year. That's an optimistic view coming in from Samvardhana Motherson. They say they'll do better in FY24 than they did in FY23. Premiumization is a big positive for them, and they are working to pass on some price increases to the customer as well. So a lot of things working in their favor.